BofA-Merrill Lynch is negative on the domestic equity market. Calendar 2017 was a stellar year for the domestic equity market, with the benchmark indices delivering around 28% returns, but the first 3 months of 2018 proved spoiler. As a result, equity benchmarks Sensex and Nifty are poised to end financial year 2017-18 with single-digit returns. Since the beginning of the financial year, market sentiments were upbeat, but the scenario changed after Finance Minister Arun Jaitley reintroduced long-term capital gains (LTCG) tax on equity in the Union Budget 2018. Global cues, including signs of faster tightening by global central banks and eruption of a trade war between the US and China, only added to the woes. Deteriorating macroeconomic factors, rising crude oil prices and detection of frauds in public sector banks also dampened investment sentiment. Yet, more than 200 companies from across the sectors doubled investor wealth on BSE over the past 12 months. Stocks from varied sectors, including graphite electrodes, carbon black, textile, chemicals and metals, emerged among the top multibaggers of the FY18’s. Among the top 50 players, graphite electrode manufacturers HEG and Graphite India sold the most at 1,322% and 547%, respectively, between April 3, 2017 and March 23, 2018. Shares of Goa Carbon, SORAL Holdings and Jindal Worldwide also rallied 618%, 498% and 469%, respectively. Among others, BC Power Controls, California software company, Sadhana Nitro Chem, Aditya Consumer Marketing and Maruti Udyog advanced between 400% and 500%. Interestingly, majority of the big winners came from the small-cap basket. The BSE Small Cap Index outpaced the broader market with a 15% gain till March 23, whereas BSE Mid Cap Index and Sensex rose 10.60% and 8.98%, respectively, during the same period. Sector-wise, textile firms Bansali Engineering Polymers, Kanchi Karpuram, Himadri Speciality Chemical and Mangalam Organics rallied up to 350% during the year under review. On the other hand, TRC Financial Services, Dolat Investment and India Bowls Ventures stood among top gainers from among NBFCs and stockbroking firms. Rama Vision, Yash Chem X, Raghuvir Synthetics and Urja Global soared over 200% during the past 12 months. Benchmark equity indices have corrected over 10% from their respective all-time highs they scaled on January 29, 2018, after rallying some 28% during calendar 2017. Negative global market clues will continue to hurt the domestic market, especially at a time when we are going into major elections in the coming months. We believe the market will bottom out only in early 2019, said Pratik Jain, Director, HEM Securities. He advised investors to avoid bottom fishing at these levels. Investors should avoid bottom fishing among mid-caps and small caps, as the market is nowhere close to its bottom. We should see more corrections in the market in the coming months led by bad global clues, said Jain. BofA-Merrill Lynch is negative on the domestic equity market. With valuations still high and earnings expectations bullish, Indian equities can continue to struggle over the next few months, the global financial services firm said in a report. Our December Sensex target of 32,000 still implies downside, but sectors exposed to rural India, two-wheelers, cement, staples, should do relatively better. We like Mahindra and Mahindra, Hero MotoCorp and Hindustan Unilever, BofA-ML said. Among the big losers of the financial year, 52-week entertainment, Meenakshi Enterprises, Shilpi Cable, Layla Textile, SFL International, Sri Adhikari Brothers Television Network, Pincon Lifestyle and Quest Financial Services dipped over 90%.